Harness may get a commission. Limitations, terms, and conditions apply.
Welcome to this week's Harness Racing Alumni Show. I'm Freddie Hudson, and I'm here today with Trade Martin and Bob Marks. This week's Harness Racing Alumni Show is brought to you by the Meadowlands Racetrack, home of the Meadowlands Pace and the Hamiltonian. Visit www.playmeadowlands.com.
The Harness Racing Alumni Show with your hosts, Freddie Hudson and Trade Martin.
We have a special show for you today. Joining us, we have returning Gordon Banks, an international Standardbred breeder and owner, Michael Antoniades, a professional analyst, and Rick Berks, a Standardbred owner and breeder, founder of Planet Fitness Health Clubs and UFit Health Clubs. Gentlemen, welcome to the Harness Racing Alumni Show.
Welcome. Thank you, Freddie.
Okay.
Thank you, Freddie.
So today we're going to be talking about the promotion of the sport of harness racing and the lack of. Gordon, why don't you lead us in?
You always put me in a bad position. But
I know.
Rick and I have been talking for a while about what might be able to be done in this industry to try to get the sport more visible, better promoted, in a better relationship with casinos. Rick has some great ideas, and I think it's best that he try to explain his perspective. But everything is with a positive outlook, trying to move this industry to a point where it can succeed. Because if nothing's done, I think there's a general consensus that the industry has nowhere to go but down. So, Rick, I think it's really on you to explain your thinking.
Well, I think you hit on it, and as you said, we've been talking about it. But from what I've seen, and I grew up in South Florida and saw what went on with Pompano when the casinos took it over early on, and it quickly became obvious that their mission it took some time, but we're not really partners with them. Their mission is basically to get rid of us, and in a way I can't blame them because we don't bring anything to the party. We just have our hands out. We're a very divided industry. We have facilities all over, but few of them ever work together or in unison. And we're losing just facilities left and right, and I don't see any end in sight, and I don't see any organization that should be leading our industry out of the wilderness here have not either don't have a good idea what to do or what they've done hasn't worked. And I think that's pretty obvious. My thought was when I look around the thoroughbred industry, and I think some of the guys were talking about it before we came on air, but there's at least, I think, 40 thoroughbred races in North America that are over $1 million purse. And typically those are where they get their big crowds. In Lexington, where I spent part of the year, everybody knows Keeneland. It's open 3 weeks in the fall and 3 weeks in the spring. And according to statistics I've read, they generate something like $1.6 billion in economic impact just in that short period of time. In the standardbred business, we have, I think, correct me if I'm wrong, 3 races that are arguably $1 million, even though North American is at a different dollar value. But between the Hamiltonian, the North American, and the Jug are the only $1 million plus races that we have. And I think that it's pretty obvious those are probably the best attended races by the public that we have and our own industry, people who are in the industry. And that's without even any significant marketing going on in a modern way. And what I mean by that is digital marketing, which that's what you have to get into to be effective today. So what Gordon and I have been talking about is we've kind of, you can go in Lexington. I go there. I was shocked to find out when Pompano closed. I bought a place up in Lexington, and I was really shocked to find out that very few people in Lexington, whether they're my neighbors, wherever you go, you'd be hard-pressed to find somebody who knows that the Red Mile exists or that harness racing goes on there. Now, that's the self-proclaimed horse capital of the world. And the track's been there 150 years, and it's owned substantially by harness industry people. And yet nobody knows that we exist. Now, I think that's probably the same in other places, Saratoga for one, but I would not be surprised to find that's pretty typical. And the reason really more than anything else is that from my perspective is the casinos or racinos, they unmarket us into oblivion. You could have walked around Pompano for days and never known that there was racing going on right outside the back door. And it was never an accident. It was in their minds. Again, my opinion is they think that every dollar spent on a horse racing bet they would have made more money if somebody put it in a slot. So from the day that we do a deal with them at every facility, our days are numbered, and they're proving it. How many? You could list all the tracks that close, and that's going to continue to happen. We're completely unknown. So I think the first thing we really have to do as an industry is unite behind something that to build our own fan base back. And we can't the racinos are not going to do it, and the racinos run the tracks basically now, with the exception of, I think, Jeff Garrels, but most of them, and they have no interest. Their interest is in the other direction. So we basically, I think, have to take the bull by the horn ourselves and find a way to create some of our own fan base, and we're going to have to do it market by market because we're so divided. But if we could unite around, and I don't mean independent of the USCA or the Hambletonian Society, I mean in conjunction with them, but I don't see them producing a plan that would get us there. And so just imagine if we had $1 million race, $2 million races in Lexington, and we marketed it properly, we'd fill that place up and people would know we were there. That doesn't exist today in most of our markets. So we have a vehicle to do it. We prove it every year by the crowds we get for the few $1 million events that we have. And so some of our, Gordon and I have been talking about, is creating what we call, I think it came up on Freddie's show a couple weeks ago, about a Grand Slam event where we took 4 of our big events and made them just like a pacing Grand Slam. And some of this I'm making up as I go along, because none of this has been decided by anything, but I'm just, for purpose of our conversation, if we had a pacing Grand Slam that we marketed as $1 million races, $4 million races, and then the Breeders' Crown, which is also a $1 million plus race. So if you had the North American, the Adios, the Pace, and the Jug, and then the Crown, you could create $5 million races. We need, and some of these are already in, we're talking about, but we're trying to create an event that people we want to fill the stadium. I mean, having turtle races or, all these kind of races don't matter if there's nobody in the stands or they only come for that. To me, throwing rubber duckies in the cars is what you do when you're entertaining between races, not to get people in the stands. So that's kind of the gist of what we were talking about. How do we create something, an event like that we market as one ongoing event where we can pick up radio, or even, I guess, in some local markets, radio too, but TV, start digitally marketing this as a big event. And our goal is to create awareness and build a fan base market by market. Now, if you like I said, go back to Thoroughbred, that's pretty much, to me, how they do it. When you go to thoroughbred tracks, other than when there's these big events, they're not really, besides the simulcasting rooms, are not well attended, but they live off these great big events. And, that's kind of the gist of what Gordon and I have been talking about. Jordan, you want to add anything here?
I'm going to throw this in. Basically what you're saying is that we, the harness racing industry, has to promote ourselves to exist and to survive and to get the sport back on track. Also, I'm just going to point out that this is Freddie speaking, by the way. Also, I'm going to point out that the thoroughbreds, they did a tremendous amount of market research, and they basically copied that plan. It's already there, and all we have to do is copy it and adjust it to harness racing. It has already been done for us. So, and that was a big money thing that they did. Michael, did you want to say something in here?
Yes, I want to echo your sentiments. If you go back 40 years, there was a horse, Spend a Buck, that instead of going from the Triple Crown, went to the Jersey Derby, I believe it was at Garden State, and chased some bonus. And because of that, Thoroughbred Racing got together and said, we can never let this happen again. So they created the Visa Triple Crown bonus. It was a $5 million bonus if you won the Triple Crown events. And there was also points for each event, which got everything back on track. Because in the mid-'80s, the mid-'80s was the greatest time and it was the worst time. But around the 80s, you had all those farms in Kentucky that had trouble. They had to build the sport basically from scratch again. So what did they do? The Derby became this magnificent event. John Gaines came up with the Breeders' Cup, a year-end championship, and that did not have 3-year-old races, because John Gaines wanted to see the 3-year-olds race against the older horses, which is still, to this day, is the big to-do. Somebody got together and said, we have an empty space in the winter. So instead of having just a Don handicap for 5 months, you started having Dubai, you started having the Pegasus, and Churchill created the Road to the Derby. Now, all of a sudden, your first 5 months are filled up, so by the time the Derby happens on the first Saturday in May, people have been watching these horses for 2 months. So, yes, as Freddie said, everything, all the components. If you watched Saratoga Saturday, last year they did $26 million. They had a lot of short fields, but their record is $40 million for Whitney Day. They did almost $50 million in a year where horse racing's not having the greatest year, but and here's why you're on the right track, Rick, because the thoroughbred, the big events drive everything. Not only did they do $50 million, but the early pick 5 pool was over $1 million. The late pick 5 pool was over $1 million. And Del Mar's late pick 5 pool was $1 million. So from a gambling standpoint, the thoroughbreds have the product. They're much better at putting on the events. And let me toss you one thing, and then I'll open it up. The Arkansas Derby draws 65,000 people. There's a block-long line to get a tip sheet. The Derby, we know, does 150,000 people. Opening day at Del Mar, which they limited to 21,000 people. They could hold more, but they limited to 21,000. They were charging $73 to get in, and they had 21,000 people. This is how far we are from where they are. This took them 40 years, and they have totally redid the sport. We need a complete reboot, and Rick and Gordon, you're two people that would be a good place to start. We need to erase everything we know, because what we know doesn't work.
Yeah,
well, Michael, you silenced us all.
No, both the combination is silencing because it's so true. I mean, everything that Rick said is right. Everything that was said after is right. And I mean, I was recently at the Adios, and the people at the Adios and the race office were incredibly nice. So I don't want to say anything disparaging, but they were talking to me about how 30 years ago they used to have thousands of people on the infield around the racetrack and above the racetrack, and how now they have no one there. And I was interested to see it was true. They for a big event, they had a fair number of people there in terms of making it feel crowded for the grandstand, but they could have had so much more done. They could have taken another 10,000 people and had a grandstand, but they don't promote it. I stayed in a hotel that was 2 miles away from the racetrack. They didn't even know about the race. There's no promotion in what everything that's been said so far. The key is promotion, having a vision. You have to have a vision to make other people see the vision and act in a way that you're hoping they will. We do nothing. We have no coordination. We don't use television at all. We spend money in disjointed ways. We have major industry players having personal dislikes that limit what can be done in all sorts of ways. We just don't have leadership that can self-promote. The key in what Rick was postulating was that this industry could self-promote. It needs to do that, but it needs to coalesce and have one vision and one objective, and it can, a lot can be done, but it has to be done in a new way, and it has to be done beginning now.
I agree, Gordon. If I can, Freddie, can I jump in here and just say,
yeah,
in marketing these, I think that in my experience, that digital marketing today is the most effective by far way of doing it. We're past the days of direct mail pieces, and not that still doesn't happen, or billboards, which are very expensive, again, still happens, but the backbone of marketing today is digital. And from my perspective, that I think works to our advantage, because you can market to the people, very specifically to the people you want to. So it's just picture we're going to create a big event and take one of these $1 million races to, and I'm going to use Lexington for no particular reason except that I started talking about it. But if you had a good marketing budget and a good marketing plan, and you started digitally marketing, and everybody within 50 miles of Lexington who buys a halter, a bridle, a boot, anything related to horses at all, or for that matter, gambling, and you started, just like you see on your social media, when you search something, things pop up like, how did they know I was looking for a refrigerator? That's what digital marketing does, and can be very specific. There's two kinds. It's paid search and paid search social, that we don't need to get into, but you can be very effective on who you want to market to. So imagine if we had a big event, and people love big events, even though they don't know anything about it. They love to come out to big events. The North American's a great example. I've been there a few times, not as many times as a lot of people, but I sit out in the stands and listen to people talking, and it doesn't take long to figure out that these people don't really know anything about harness racing. They want to see the $1 million race. It's a big event. And now when you go to these small markets, which is where we live, think about we're all outside of the Meadowlands, but most of our markets are all smaller markets. And a big event like that in a small market is a big event. A big event in a big market is just another event. So the combination of, and people in small markets will drive much farther distances because it's easy to travel 20 miles in rurally than it is in a city, obviously. So you can expand where you can market to. But we can take the things that people may think as negatives, like being a small market, and the fact that we haven't done any of this digital marketing in a coordinated way, especially around a sequence of events, means that all that opportunity is there. We just need to, figure out a plan to do it, market the whole thing, and I think you'd be amazed at how big a crowds could we get there. Now, what happens? People go, well, what's that? What does that mean? So they had a big event. How's that going to help us? Well, because I'll go back to digital marketing. If I send you a digital marketing that says we're having $1 million race at the Red Mile, here's your free pass, sign up here, download this. Now you capture all their information for future marketing. You start building a big pool of people you're going to market to, and it keeps growing. And that's what goes on in the rest of the world outside of ours, including thoroughbreds. They capture and it keeps a growing number of people, so that's how you keep doing it. Now, how does that affect the Racino? Well, obviously, bringing people out there when we're doing this marketing, we give them get with the casino and try to get them, like, if we get 10,000, 20,000 people out here, we want you to give them a pass for $20 slot play to get them into the casino. Now, some percentage, I don't know what, but some percentage of those people, we show them a good time, will come back. The casinos know how much that means to them to get people through that door. They could tell you to the dime probably what every customer is worth to them. So we keep building this, and again, market by market. In time, you're going to start, when you start having these events, but you'll also build up an online, basically you're becoming known online, where we're completely unknown now. And you start growing this population of people we can market to. But again, it all has to be done, we need one big plan, as Gordon said, and then keep building it from there.
Rick, what type of budget do you think we would need to market the whole sport of harness racing?
Well, it's hard to answer that because I have not been involved with this type of marketing in several years, so things change. But just looking at it, if we tried to create this pacing Grand Slam, again, I just made up the name, but to get all 5 of those events over $1 million, it cost us about $1.5 million if you look at it. And then you'd have to factor in probably, I would say anywhere from $25,000 to $50,000 per location to market, especially out of the box. We're trying to build a big online audience. So the total of what I think it might cost us to do this whole thing, including the marketing, would probably be in the area of $2 million. Now, how much per market? Again, until we do it once and see the impact, we'll learn as we go, because we're starting from scratch. And that can be good and bad in different ways, but after we do a little bit, so it's hard to answer that question until we do it some, but it'll take a substantial amount of money to get us off the ground, and then I don't know that we'll have to keep that pace to do it, if that makes sense.
Yeah, Michael, you're an analyst.
Mike, I was just going to add one thing, that on the marketing dollar amount, the other factor that one can't quantify right now, but you certainly need this series to be covered on network. If you don't have network to push it, it's going to be very difficult. The in-house shows can't really do it. The industry hasn't done too much. You want this, also from a fundraising perspective, you want this on network TV because it's going to broaden your reach of outside industry participants. The assumption that Rick and I had was that we could probably raise $1 million or more within the industry through the sales, through the breeders, through various different means. One of the concerns is that in the past, so many things have been tried to fail. They had the Classic Series that was funded through the sales and never materialized as anything that could be kept. So there's some negative energy in the industry with respect to how to finance within the industry. But our assumption was that we could raise half or more from the industry, and then we have to raise half outside. And then that TV network aspect is really crucial because that's the medium by which you take it to a thoroughbred level.
Okay, the next thing.
If you look at what NYRA's done, they've got 25 hours of programming every week on Fox Sports. And what is that worth? I have no idea, but even on a Wednesday, they come on at 1 o'clock, they stay till 6 o'clock, they show the races. Saturday, you watch the whole Saratoga card. I mean, this is all new stuff. 25 hours of programming every week. Not to mention TVG's on, and TVG has a solid group of people, running that network, and they're constantly driving, the product, and their talent is excellent, and we just can't get anything close to this.
Michael, I'm going to jump in over here, Freddie here.
Sure.
If you go back to 2011 when the McKinsey report came out, the McKinsey report came out and basically told the thoroughbred industry in that report that currently you have to increase your TV coverage. They were doing 40 hours a year in coverage at that point. Since then, they increased that to, I think it's over 1,000 hours a year now. I think the last figure I looked at was like 900 and something, but I think it's over 1,000 now. And one of the reasons that they had recommended the TV coverage was that we have an older audience that is watching our races. And while the younger generation is going to the social media sites for their entertainment and so forth, the older people, our audience, was going to TV more. And so they basically felt we could protect our fan base by going to the TV, and that was their reasoning behind that. No,
I mean, there have been all kinds of suggestions made. That was a good one. There's been all kinds of suggestions to lower takeout. They haven't done that. When the Fix 6 happened at Arlington in 2002, they said you got to totally revamp the tote system. What have they done? Nothing. So now, 20 years later, you see horses, even at Del Mar, going from 18-1 to 6-1, from 9-1 to 5-2. And it's like, boy, how can this happen? Yeah, this was addressed in 2002, 23 years ago. And here we are. And we still can't figure out how to do this. And the reason is you don't have enough gambling people in the industry to point things out that are simple to gamblers, but not necessarily simple to people that are, in the other parts of the business, the breeding part of the business, the marketing part of the business. The gambling part of the business has to drive this. And I don't understand as a gambler why that should be so difficult to understand, but it is.
Okay, the other thing, I'm going to make a suggestion, is that maybe we should put a committee together and figure out who we should invite on this committee and start this thing rolling.
I have an idea. This is Michael, and Rick, you can do this, and Gordon, you should be in charge of this. Amass 30 or 40, probably marketing people, your best marketing people, and the people that maybe investors, and I would make 4 stops. First one, the Arkansas Derby, and see what it's like to see a crowd of 65,000. Then I would take them to one of the nighttime Churchill parties. I wouldn't take them to the Derby. I'd take them to a nighttime Churchill party, theme parties for younger people to dress up. Everyone's got a cowboy theme or something. Upscale, they draw 25 or 30,000 people, but these are not racing people. And ask Churchill, how did you do this? Then go to opening day at Saratoga, wait for 1,000 people there at 7 in the morning to come in, and when the apron comes up and you see all 20 and 30-year-old well-dressed people on the apron like it was for the Belmont, ask the marketing people at NYRA, how did you do this? And then finally go to Del Mar for opening day, where they charged, as I said, $73 to get in, and they were sold out. They could have probably sold out 40,000, and ask the marketing department, how did you do this? Because they've done all, Freddie said it, they've done all the steps. All we need to do is come up with a plan to come up with a reasonable facsimile of what they did. The work's already been done.
Yeah, but Michael, it's more difficult in our industry because the biggest impediment to this is that there is no desire on the part of the owners of the racetracks to spend any money or do anything to make progress. If anything, they want us to go backwards. So you have to fund this, at least in the beginning, somewhat independently of the owners of the racetracks, except for the Goral and the Red Mile tracks, and you have to find a way to achieve an objective that this industry has never been able to do. That the USGA does nothing towards promoting the industry. I'm not saying it should. It wasn't their original mandate. They really should just be a data resource. And there's a void in the industry of leadership in marketing and promotion. But everything is extremely doable if there's a willingness to spend. You can't create a change without spending. Nobody's willing to spend. I mean, and each of these solutions are local. It's a good idea to go see those things, but you don't even have to see them to know they exist and to know what's required. If you go to the Meadowlands, for example, look at all the assets within 15 miles of the Meadowlands. All the shops, all the stores, all the restaurants. How hard would it be to have a special evening where you bring in a celebrity chef for a special theme party? Other things. You could in a span of 2 or 3 years get that place packed with celebrities, with interesting people, with a different audience. But there's no desire to do it. Instead, the Meadowlands promotes by throwing dolls into a passing car. I don't mean to make fun or belittle that, but that has no chance of in any way helping the industry and the business there.
You know, I'm also, this is Freddie here again. I'm also going to jump in here. Jason Settlemore several times has tried to present to the United States Trotting Association's board an idea of taking like 5% of the gaming money that comes in and putting it into a national marketing program to promote the sport. And before he could even get it out of his mouth, Joe Feraldo shot him down, and half the directors got up and walked out of the meeting.
Yeah, because this is an industry where what's holding it back is the desire of each entity to just protect what it has, and each leader in the industry to protect their job and their base. With all we're talking about big events that generally, in the first instance, benefit big players and big horses. So the immediate response of people in the middle or bottom level of the industry in terms of dollar value and value of the horses, they go, wait a minute, what's in it for us? And as Rick has said to me many times, the boat goes for everybody. And the more success we have with big events, the more there is available for other events. And there has to also be an awareness that everybody pulls together. And that requires leadership to unite the industry that just isn't there. That's a real problem. I think what Michael's talking about, what Rick's talking about, what I talk about, there are common sense solutions that are necessary. It's almost impossible for someone to say that's not the right way to go. The problem this industry has is when they see the right thing to do, they don't do it. And the question is, how do you get this industry to do those things?
I do think that our first start should be to put a committee together, and definitely we need to have the USTA representative or someone from the USTA on that committee, and definitely someone from the Hamiltonian Society like John Campbell to be on the committee. That would be my recommendation to start getting this off the ground. And
I think you first need a business plan. I think you need a business plan first. You're
supposed to be working on a business plan, Gordon. Remember, you and Mark?
I thought you had that done.
Yeah, I have to translate it from French. But we need the business plan first, that Rick would be happy with it, I'm happy with it, that you and Michael and other people are happy with. Then one tries to form an effective committee, I think, that can reach out and have specialists in each field. You need people that can help on the marketing end. You need people in various different ways. But I think the first step has to be that there's a somewhat vetted, specific plan that one can attempt to follow, and then one can also take it to networks and see their reaction, because nothing's going to fly exactly as you design it, nor easily. So we have to coordinate it, because you have to be able to raise money in the industry, and you have to be able to raise money outside the industry. But the plan is crucial as a first step.
Okay.
Gordon, can I jump in here? I think it's Rick. I think Gordon was trying to say a rising tide lifts all boats in the harbor. But,
yes.
I don't know where he went there, but and it's true. One of our first hurdles that we, in this conversation with other people that we had to jump was what Gordon just said, that people look at it and go, oh, this is great for the rich guys racing for $1 million. How does this help the little guy? And my immediate response is, because if we don't do this, the little guy won't have any place to race. The idea that it's kind of like the lottery, and that people buy lottery tickets. Only a few people win the lottery, but the lottery money theoretically goes into the education department, the people that profit from it. Well, in this case, we're doing, a few people, but most of the people who are buying and racing horses at that level are not making money. I mean, they're having fun and racing for big dollars, but the majority of the people are not necessarily making a lot of that money back. The people who really win in this scenario, obviously the breeders, because the more money that we race for, the more valuable their product is. And that's why thoroughbred race horses are so much more valuable cost-wise than a harness horse. But that's something we can change. And the analogy to the lottery does make sense in a way, that because if we look at the freehold, where are they racing now? Now, had we gone in there and done a big event there and made people aware, one of the things that happens if and when we do this is that from the perspective of the casino who'd like to get rid of us, it's going to make it, I think that they're going to have some resistance to it, because the more things that we do, the more known we become, the more aware the public and then the politicians become of that we have a following and have an audience. They look at that as voters. That is going to make it much, much harder over time for the racinos to get rid of us. And that's the major goal here. If we could build our own fan base and start doing all the things we're talking about, we'll stop losing tracks in closing facilities, because it'll make it very difficult for them to go to the politicians and say, nobody cares about this, nobody even goes, nobody bets, because that's what you guys want, and that's why you've unmarketed us into oblivion. But when we turn that around, this goes right to our survival. So anybody thinks this is only for one group of people in our industry is not seeing the big picture.
Okay.
Yeah, I think that's very well said. I think that's a really important point that we have to keep focus on, keep hammering away at.
I think there's two things to add to what Rick said. Number one is the reason people invest in thoroughbreds is the purses are so astronomical compared to harness. And I'm not talking about the total purses. I'm just talking about maiden purses, allowance purses, claiming purses. You need to get these purses higher, and everyone knows the only way to do this currently is to have less racing days. But that's the give. That's the quid pro quo. You've got to get these purses higher if you're going to get people really interested in the sport. And the second thing is that all the things you said about casinos, that is why everything's going to end up in Kentucky, because the gambling product in Kentucky is owned by the racetracks, and the racetracks want to push racing. There's no shareholders like there are of a big gaming company saying, we just spent $1 billion on this track. All we've got to do is get rid of racing and we get our $1 billion back, right? Because they're worried about the stock price. Well, in Kentucky, that doesn't exist. And that comes back to the point you made, Rick. That's why everything's going to end up in Kentucky.
Okay, gentlemen, I want to thank everyone for joining us today. Rick, Michael, Gordon, thank you so much for joining us.
Thank you.
Pleasure to be here.
Okay, that's a wrap for this week's show, and please join us again next week.
The Harness Racing Alumni Show